Good afternoon, everyone. We're excited to have you with us to talk a little bit more about Harvard University Employees Credit Union, as well as teaching your students to manage their finances. My name is Sarah Scruggs. I'm the Community Engagement Specialist at the credit union, and part of my role is doing personal finance education as well as reaching out to the different pieces of the Harvard community. And so throughout our presentation today, I do want to make clear that although everyone is on mute, we hope for this to be interactive, and if there are questions that you have, we hope that you're able to find the questions button either on the right-hand side of your screen or at the top of your navigation, depending on how you signed in today. And so if there are things you have questions about, or if we don't cover something that you want to hear about, please don't hesitate to use the questions feature and go ahead and ask us those questions. We are here to answer them. Our presentation material really is about 15 to 20 minutes. So we hope that most of this time will be spent answering our questions that you have and more of how we can help you, especially as we are all sitting in our own homes tonight, thinking about starting college and your children possibly or family members starting college here at Harvard University. So first, congratulations. You've made it this far, and one of your family members is at Harvard. And that is a great accomplishment and something to be excited about and proud of, even in this strange time. So we'll get started with our content. First, looking at who is the credit union. Here at Harvard University Employees Credit Union, you may be thinking that's a little strange that the Employees Credit Union is giving a presentation to students and their families. And the good news is that we serve the entire Harvard community now. When our name began, we just served employees, but now we have expanded out, not only serving students, also serving alumni all over the world, as well as serving all of our teaching hospitals here at Harvard. So our community is large, but we feel that we still are able to give this personal touch. And so Harvard University Employees Credit Union really commits to offering quality financial services as a not-for-profit here at Harvard. And so really our biggest values here are that we are serving our members to the best of our ability. And that looks like having lower rates on loans, higher rates on savings, because we are able to give back to our members in that way. And so we want to make sure that we are strictly being that community credit union that we can be for Harvard. We believe that that is our biggest mission. So if there are things that we can provide to the Harvard community, we are here to do that. One of the things that we do offer to everyone in our community, not only members, but everyone, is a service called Greenpath Financial Wellness. Greenpath Financial Wellness is a nonprofit that works with credit unions like ours to provide free one-on-one financial counseling. This happens over the phone. Their hours Monday through Thursday go until 10 p.m. So even as your student may be up into the night, Greenpath Financial Wellness is there. They do one-on-one free budget counseling. So if your student has never set up a budget, or possibly you've never set up a budget, they do great counseling for that. They do counseling through credit report review. They have accredited credit counselors. So maybe you have questions about how your child can start building credit or how your family member can start building credit. I encourage you, reach out to Greenpath and they can work with you on some individualized ideas on how to do this. And like I said, those things are free, not only to the students at Harvard, but to all those in our community, including everyone on this webinar. And you can find more information about Greenpath and what we do as we work with them, as well as some great informational videos at huecu.org/Greenpath. And something I will point out as well, during this time, they are providing free COVID-19 counseling. So if you find yourselves in a difficult situation, this is a great time to call them as well. Like I said, it is totally free. All you have to do is mention the credit union. So we're getting started on kind of the meat of our presentation today, and that is how can I support my student with money decisions during college? This is a big question, and I don't think that I will answer this question 100% today, because I think every family is a little bit different. Every student is a little bit different. And so there are ways that you can support that I probably won't mention. There are definitely ways that you can, that I will mention today and kind of speak on. So knowing that, there were a couple questions that we received in our registration process for this, and we thank you for those. And so I did want to start out with one of those, and that is, someone was asking a little bit about how to manage checking versus a savings account. And this is something that I think is really important to understanding your own personal finances and taking control of them. So for myself, I really didn't know much of the difference between a checking and a savings account when starting school just a few years ago now. But when I think about a checking account, I really think about that as money that I need to have easily available. That's my easy available money. And it's not something that I'm putting towards a certain savings goal or things of that nature. And my savings account is where I, number one, keep my emergency fund, which we'll get to in just a moment, as well as keeping any additional savings that I want to earn interest on. So this is the money that stays in my savings account for the most part, can be used during emergencies and if necessary, but this is mostly where I put the money that I'd like to earn interest on, is in that savings account. So those are kind of two different ways to use your checking versus your savings account. So we'll start with planning ahead, helping your students set up a budget. Possibly your family has had a budget for years and years. That's wonderful. Possibly your family has never sat down and written out their budget before. That's okay too. I think right now what we really want to emphasize is that students have a rare opportunity to sit down, really take some time with their budget these first few weeks of college to see, what do they need to spend money on? Well, your students probably need to spend money on a few things as they begin their college careers. And what are some things that they're possibly spending money on that aren't something that they want to spend money on or need to spend money on? Setting out a budget really gives you a good idea of, okay, these are things I'm spending my money on. How can I make sure that I'm spending my money in ways that are, number one, useful, necessary, and things that I want to spend my money on? Your student could possibly be getting a job for the first time or continuing on in a job from high school. Those are great things. Use that paycheck and budget it out. Sit down with them and help them with a budget. Budgeting can be as simple as sitting down with a paper and pencil and writing out the income, your expenses, and then you get to know, how much you've spent that month and what you've spent that on. It can also be extremely down to the cent. There are some people who that works for. We do have a online budget builder on our online banking at the credit union. And to be honest with you, most financial institutions do. So if we are not your financial institution, I'm sure that your online banking platform could have that feature as well. So go and look on your online banking and check that out and see if you can build that budget with your student and kind of show them how you would build a budget. Show them, we want to make sure we have enough money for our needs, so a roof over our head as well as food. And then we also want to make sure we have enough to spend on things that we want, because from time to time, there are things that we want, like eating out, going to the movies when that is a good thing to do again, as well as saving. And that's what I'll go into now. Savings looks very different at different points in our life. And I think one thing that's important to point out is it is never too early to save. And as someone who started saving when I was very young, in little pocket folders for each of my accounts, I started saving very young, and that definitely hasn't left me. So when you're a student, your savings isn't probably thinking towards retirement just yet, but it's thinking towards maybe your first apartment, your first car after you graduate college, or you know, putting a down payment on a house, you know, about 10, 20 years from now. One essential piece of the savings portion is going to be an emergency fund. The emergency fund is what experts call about 3 to 6 months of essential expenses. Students can start building up their emergency funds now, while they're able to possibly take in an income from a job, or possibly using that money from work study towards this. They're able to put money there in the emergency fund in case any emergencies do arise or do come up. And so I really recommend that you start off with a small goal. Normally, when you're able to reach your small goals, those large goals don't look as daunting anymore. So really start with those small goals and build them up. The next thing I want to speak about is credit, building credit in college. And there was a question that was asked about what are reasonable expectations for students as they manage their credit for possibly the first time. And that's a great question. And again, we appreciate you all asking these. And so the thing to probably think about here is that students really have the opportunity to start hopefully from the ground up. No, that doesn't mean their credit is at zero. That possibly means that they may not have any credit, or they may have credit that they've earned based on being an authorized user on a credit card that you may have, or a parent or guardian has with them on the account. I know for myself in college, my parents wanted to set me up for success so that I was able to rent an apartment when I graduated college, and buy a car that I needed to buy when I moved, and was able to use a car more often. And so I became an authorized user on my parents' account with my credit card. And they gave me very strict rules about when I was to use this credit card, as well as what my payment schedule would be to pay them back. Because I did have a job in college that was important to my parents, as I had worked all throughout high school. So I needed to get a job in college as well. And so I knew the expectations set out for me, but I was able to build my credit using this credit card that we were able to pay off monthly, and we knew that we had the income to pay that off. Another great way to possibly build credit for your students is if they have taken out a federal student loan. That will help them build credit in the future. And so that is a great way to kickstart your students' credit. And I think something that is a reasonable expectation for college students is to talk with them about getting their own credit report. Annualcreditreport.com is a great way for students to get their credit report for free from all three bureaus. That is the website that's authorized by federal law. Again, annualcreditreport.com. And they can look through that credit report, whether that be with you or talk over the phone with Greenpath Financial Wellness. But I think that's a really reasonable ask of your students to go ahead and get that credit report, and learn more about that credit report with either a accredited credit counselor at Greenpath, or with you if that's something you're comfortable with. And then the last thing that I'll say is that it's important, if your student does not have their own checking and savings account right now, that could possibly be a step that your family takes at this point in time, is to set up their own checking and savings account in their own name. You do have to be 18 or older to have your own checking account and savings account. If your student is 18 or above, they have this opportunity to get their own checking or savings account. And I believe that both of those are extremely important. So if your student has an account that possibly you're the holder of, this would be a good time to move them into their own account and have them look for an account themselves. Look for an account that fits what they want. What are their needs? And make sure that it's an account that you definitely can encourage them to handle on their own. That's the most important piece of the puzzle for that. I now want to hand it over to Migdalia Gomez, who's our Community Engagement Manager, who will take us through a little bit more of the College Life account here at HUECU.
Thank you, Sarah, and congrats everyone for your student being now part of the Harvard College community, and more importantly, now all of you are part of our community as well. So congratulations and thank you for joining our session today. Before I jump into our College Life account, I just wanted to there were a couple of questions that came in, so I'll probably take a moment to talk about those. And I also wanted to point out that Sarah and I have both worked in higher education. I've been at the credit union for 4 years, but before that, I worked in another institution here in Massachusetts, and we know how challenging it could be for families to help their students navigate their finances. So the fact that you're all here trying to learn a couple more tips to help with this process is amazing, and we're thankful for you doing that. We wanted to also let you know that in addition to today's session, we at the Harvard University Employees Credit Union are 100% focused on improving the financial well-being of all of our students. So in addition to today's session, we also have sessions that we host throughout the year for students. We also have them for parents. All of those you'll be able to, if you're interested, register at any point on our website, huecu.org/workshops. You can also view other sessions that we've done in the past. For the students, we have in January a winter session where we have professional experts, I should say industry experts, come and talk about investing, retirement, and it's one of our highest ranked presentations that we do for students. And a lot of what Sarah and I are talking about, we are putting this information together based off of recommendations from our students. We have a student advisory council at the Harvard University Employees Credit Union. So if your student is interested in learning more about financing and having an impact on what other students at Harvard learn about finances, not just undergrad, but the graduate students as well, they're more than welcome to join our student advisory council, and we'll have information about joining for the 2021 academic year in the next couple of weeks. But I do want to take a moment now, and there were a couple of questions, so I'll sort of take this one, and then Sarah, I think you may have others, but one question that came in regarding credit cards was, if a student is an authorized user on my card, are they building their credit in their name, even though technically it's not their card? That's a great question, and thank you for bringing that up, because it can be a little bit technical. So when a student is an authorized signer, if they are just an authorized signer and you did not provide their social security information, I'll speak for myself. My mom is an authorized signer on one of my cards. She retired and lives internationally now, so it's just easier for her. She's on one of my cards, and I added her as an authorized signer. My credit card company did not ask for her social security number. They basically just needed to know what's the first and last name, and they sent the card. That is not at all impacting my mom's credit score, because it's 100% responsibility on me. Now, if I had a student, or if my mom co-applied for that credit card and they actually pulled her credit report, then she would be an authorized signer, a co-borrower on that account, and that's when it would impact the credit score. So I would check with your credit card company to see what are the options that are available for you to either add an authorized signer, or if you're really trying to build that credit, to have them so that it is being reported to the credit bureaus. Credit card companies tend to be a little bit different. So there may be some that may also report authorized signers, but typically the authorized signers are just getting a credit card and it may not be impacting their credit. I do want to point out, I have done work at the credit union with looking at credit reports, and one of the things that we can tell is when it typically is a student on just the parent's account versus a student who sort of built that and is utilizing that account. So think about, if you are going to add your child to an account, think about when they get to your student to an account, when they get to the point that they are more ready, they can apply for a credit card on their own, but I would always recommend starting with the lower limit once they do that on their own, $500, $1,000. At the credit union, we'll do student credit cards up to $2,500, but we always say if it's the first credit card for the student and they're not quite there yet, we can have that be a lower limit so that the student is in a much better situation to pay that off. Now, with the excuse me, Sarah, were there any other questions before I move forward that you think we should answer now?
I think we are good at this point. If any more do come in, we'd be happy to answer those.
Thank you. So what exactly does a college life account look like at HUECU? So we wanted to take a moment to just walk you through some things about our college life accounts for those that you are interested in learning more about what the benefits may be of our account. And you'll see on the next slide a little bit more details regarding the fee structure on our credit cards, which essentially means that on our college life account, for our students, we understand that students for the first time, they may be managing their account for the first time on their own. So we don't want to be charging them excessive fees. And also as a not-for-profit financial institution, our members are our owners. So we're here for the better of our entire membership. So we tend to be lower fees to begin with. But with students, we want to help them mature into responsible adults financially. So we know that sometimes mistakes may happen. So we do have essentially fee forgiveness. If students are charged certain fees, we are able to forgive a certain amount of them. But then we also just have some fees that we do not charge at all. So we don't charge fees for incoming wires, for bank transfers. We also provide, and this as family members may be helpful for you if you want to be able to sort of keep an eye on your student's account. The students have the ability to share access to their online accounts with us. By sharing access, they 100% can determine what kind of access that is. So if they wanted to, they can give you access to view their account, and that's all. You can just view it. Or if they wanted to, they could share full account access. So if you wanted to be able to go in and transfer and pay bills and essentially use their account as if it were yours, you could do that as well. So students have that opportunity. A little tip as we are trying to empower our students to be financially responsible, maybe a view only access might be all that you need if you just want to peek in every so often just to make sure that they're staying on budget. And Sarah talked a lot about budgeting and all these other great financial tips. And I think as caregivers to our students, one of the things that we can do is sort of help them by helping them be accountable. And there's a fine line, as I'm sure you all know, as family members, there's a fine line between being accountable and then being the sort of, uh-oh, you did that wrong. It's more checking in like, oh, you mentioned you wanted to save for a vacation or for a trip or for this big purchase. With our accounts, they can name accounts, they can actually set up online budgets, and that you can be able to track that. So you can go in there and if they give you that view only access and see how they're doing on their savings, and then just give them a nice little friendly reminder. Ooh, I thought you wanted to have a little bit more. What can be done to help you move in that direction? We have a video which I will share to the questions panel shortly so that you have it, where you can hear straight from our students what are some advantages of the college life accounts and just some general thoughts that they have about finances and just budgeting in general when it comes to living as a Harvard College student. I just sent the link so that you have that. You can view that at your convenience, so you can hear directly from our students, because our students are going to tell you exactly how it is, and we wanted to make sure you heard it from them. So we're going to open it up now. I see a couple of questions that started coming in. Before we go into the questions, I just want to remind everyone that we are here for all of you, not just those that are members. For those that are not members yet, we, of course, would welcome you to our community. Once your student is a member of the credit union, you then become eligible, and anyone in your household then would become eligible as well, meaning that if the student joined and then the parents join, then the parents' siblings or the parents' parents or the parents' other children can also join. And if you have any general questions, we'd be more than glad to answer any more specific HUECU account questions as well. I'm going to open it up now and start answering some of the questions that have come in. The first one that came in: how can parents begin to introduce their students to investing? Oh, that's such a good question. And not surprisingly, investing tends to be one of the top topics of interest for our students across the board. So we do work with our undergrad students and our graduate students at all of the schools. So we're talking from the college to the business school to the Kennedy Grad School of Ed, so all over the board, and investing is always a hot topic. I always recommend students to start small. What I mean by that is, a lot of times students will think of investing, and adults as well, we do this as well, and we think sort of like the big, oh, I'm gonna get rich quickly. I just need to find the right stock. I need to find this. And investing really is for the long term. So one of the things that we recommend is for the students to start educating themselves. And there are a couple of different websites. There's investor.gov. We always like to send them to the government sites first. They have good information, and it's a good way for them to build their knowledge base. Also, there are a couple different calculators online. We have some on our website. NerdWallet has a wonderful retirement calculator that will show students investing when it comes towards retirement. And that the reason that we like to shift them to do a little bit of thinking about investing and retirement before sort of thinking of investing this other funds that they may have is that a lot of times our students are graduating and they may start thinking, okay, I need to start investing, but they don't realize that saving for retirement is a form of investing. And the first few years out of college is really a great time to save, because with compounding interest, that can lead to thousands and sometimes 50, hundreds of thousands of dollars of difference over the course of the long term. So to get students started, I would recommend having them go onto NerdWallet, use some of the calculators, also go onto investor.gov so that they can learn a little bit more. As students, and this is another question that came in, should students open both the IRA to start saving for retirement and take advantage of early savings benefits? So unfortunately, we cannot go into the specific recommendations, and that really is because it would be a disservice to you. One, we're not qualified retirement professionals, so we don't want to speak out of line, and we don't know your specific situation. I can provide some general information that in order for students to open a Roth IRA, or essentially an IRA or a retirement, they need to have earned income that comes onto a W-2. So if the student isn't working, they may not be eligible necessarily to save towards retirement. But what I would recommend is if you go onto the irs.gov, and I'm blanking on the URL, it might be /retirement plans, but if not, it's definitely on the IRS website. They have a couple of different tools when it comes to deciding whether or not a Roth might be a good option. And it is a great source to go to because the IRS is the source for the retirement plan. Like, retirement plans are IRS codes. So it's a good starting point for students to get a little bit more information. But these questions that you're asking are pretty much a lot of the questions that our students will ask us. And when we have our session in January where we have industry experts that will come in, we do have professional certified financial planners, certified public accountants that are managing high net worth individuals, and they come in and they talk to our students and they'll go into very specific details. And if you go onto our website, and either myself or Sarah will share with you www.huecu.org/winter session, you can actually see some of the slides that our prior presenters have done, which does talk about investing. They do talk about Roth, and it's general information, but it is a good starting point as well. There was another question that came in, and Sarah, I don't know the acronym. Can you enroll in CLA virtually? But I'm not sure what the CLA is.
So
the
that's
College Life Account.
account.
They're using an acronym that we don't use. That's so funny. Thank you. I like that. We should just start calling it the CLA. We have a lot of acronyms, so we actually don't do that for the College Life Account. But I do like where you're going. We'll take it back to the team. So yes, you can bank with us online. You can join virtually. That's, even before the current pandemic, we've always been accessible to our membership because we are Harvard, and we are, we have members, we have students that are global. Like, we have an international population. We have people that are in California, people that are in Alaska. We do these webinars, and it's great to do this for our full membership. And we've done webinars for our full memberships, and we've had people from Brazil join us, people from Europe, people from Asia. So it's beautiful to see how far spread our members are. And as a result, we put a lot of effort into making sure that our resources are accessible to everyone, regardless of where they are. So with that in mind, you can join online, you can apply for any of our products. We have mortgages, student loans, we have credit cards, auto loans, all of that can be done online. You can open accounts. We also have CDs, we have IRA accounts, all of that can be managed online. Our mobile app, you can deposit checks online. And then we also have shared branches, which means that you can go to another credit union and bank with them as though you were with us. I will say that during these times, because of COVID-19, some of the shared branching has been limited, understandably so, because not a lot of people are allowed in certain spaces. So it may be that right now it may not be as accessible if you're trying to go into a branch, but typically our members are able to go to another credit union and bank with them as though they were with us if they needed that one-on-one attention in person and weren't local to us. But our support center, our online banking, that is always accessible. Thank you. These have been really good questions. Sarah, do you have any others that have come in?
None that have come in on my end, but if there are other questions, we are happy to take them.
I don't see any other questions. So I just want to thank everyone for joining us today. Congratulations again for joining the Harvard community. We're so proud of you, for your students. And we know that the next couple of months may be challenging, aside from, we know obviously the global pandemic that we're in the midst of, but they're just the challenges of entering a new university setting and managing that. And as families, how do you help with your student? So if there is anything that you think about in the future that you have a question or maybe something that we can clarify, just let us know. You'll receive an email from us that will have our contact information, but you can also find our contact information on our website, and we're always here to help you in any way that we can. And we congratulate you again and hope you have a wonderful evening, morning, afternoon. It all depends where you're joining us from, but we hope you have a wonderful rest of your day.